You're live.
Good morning, everyone, and welcome to the California High-Speed Rail Finance and Audit Committee meeting. My name is Nancy Miller, and I am chairing this meeting because our esteemed chairman, Tom Richards, is unavailable. Can we have a roll call, please?
Chair Richards. Director Camacho.
Present.
Vice Chair Miller.
Here.
Director Guillemette.
Present.
Madam Vice Chair, we have enough to begin the meeting.
Thank you. Mo, would you give the announcement regarding public comments so those members of the public on our call today can know when they can comment?
Of course. Good morning, all. Welcome to the California High-Speed Rail Finance and Audit Committee meeting. Today, we are hosting this meeting remotely via the Zoom application. In a moment, we will begin public comment. First, we want to run through some important technical aspects of this meeting for offering public comment. If you are logged into this meeting via the Zoom application, please utilize the raise your hand feature, typically located at the bottom of your screen, so that I may call on you to provide your comment. If you're dialing in by phone, pressing #2 will raise your hand and put you into our queue. Speakers will be called in the order that their hand is raised. Once you've been in the queue and your name is called in the web meeting, please click the prompt on your screen to allow your microphone to be unmuted. On the phone, we will call on you by the last 4 digits of your phone number. At that point, you'll hear a message that you are being unmuted. Once unmuted, it'll be your turn to speak. Please slowly and clearly say and spell your first and last name, and if applicable, state the organization you represent. After your introduction, each speaker is allotted 2 minutes to provide their comment. I will interject at 1 minute and 45 seconds to provide a 15-second warning. Our court reporter is on the line to record these comments. If they need you to spell or repeat something, they may interject. I will notify you when your time is nearly up at the end of your comment. We will disable your microphone. However, you are welcome to stay on the line to continue watching or listening to the meeting. If you do not wish to provide comments, simply want to watch the meeting, you can do so by logging on to hsr.ca.gov and looking for the link to our live stream. And for the attendee who just joined us by phone, if you would like to provide public comment, pressing #2 will raise your hand and put you into the queue.
Do we have anyone that would like to make a public comment, Mo?
Nobody has motion to raise their hand. I'm just going to go one last time. If any of the attendees would like to provide public comment, please use the raise your hand feature if you're logged in via Zoom. If you're joining in by phone, pressing #2 will raise your hand. Nobody has motion to raise their hand. Oh, apologies. Madam Vice Chair, we have Roland LeBrun up for first public comment.
Good morning, Mr. LeBrun.
Good morning, Madam Chair, Directors. A quick ask. Would it be possible to enable the save transcript icon? I'm looking at the transcript. There is no way to save it other than screen capture. Thank you.
Staff, do we have an answer to that?
I'll work with the technical team to see if we can get that enabled.
And if it's not enabled live, Roland, I know it will always be, it can be available to you after the meeting. So let's move. Any other comments?
Nope, nobody else has motion to raise their hand, Vice Chair.
So let's move to our September meeting minutes. Do I have a motion?
Move
Move
approval.
Second.
Moved by committee member Guillemette and seconded by committee member Camacho. Can we please call the roll?
Director Camacho.
Yes.
Vice Chair Miller.
Yes.
Director Guillemette.
Yes.
The meeting minutes pass.
Thank you. And on to our next item C. I have no remarks, initiatives, or updates. Does any other member have anything they want to say on this agenda item? Hearing none, we'll go to the audit item, contract management report. Brian, are you?
Good morning.
Oh, there you are. Hello.
I'm Paula Rivera, and I'm here today to share the results of an audit that we performed of the authority's contract management. This audit was performed, or we started this audit about two and a half years after the state audit report was issued, as a follow-up, specifically to see how contracts were being managed at the authority, but also to follow up on the recommendations that were in Chapter 2 of the state audit report. So our specific objective was to determine if contracts are managed in compliance with the authority's contract management policies and procedures. We tested 18 contracts, which was about 8% of the total. And those contracts were about 12% of the total value of the contracts that the authority had in active at the time we started our audit, which was last October. What we found was that contract management documentation is not consistently understood or followed by the contract managers. So we weren't able to find about 150 of the 630 documents that were required, which is about 24%. Since our audit was completed, the procedures have been revised and that documentation has been clarified. Some documentation that was identified 5 years ago as required, it was determined to be merely helpful, a job aid or a reference document. So we had some, we had 3 findings, but the recommendations were pretty much all the same. We recommend the authority put together a work group of subject matter experts to take a look at these procedures and see if they can be modified to work for all the different types and scopes of contracts that we have at the authority, and also to look to see if changing one contract is going to upset the workflow of another. So individually, we recommend the procedures be revised, but also as a whole. We recommend that committee report its progress to the executive committee at the authority. And I'm here today with Jeannie Jones and Jazz Jones, and they are going to fill you in on the things that they've done in response to the audit.
Thank you.
So good morning, everyone. Thank you, Paula. We would like to thank Paula and her audit team regarding the findings and recommendations that they found for us. I also appreciate the acknowledgement in the audit that we did generally maintain the findings from the 2018 state audit, and we are, striving to make sure that we have the best contract management area in the state of California. That being said, I'm happy to say that a lot of the recommendations that Paula and her audit team recommended to us are either completed or are well on their way of being done. For example, as Paula mentioned, the policies and procedures are completed. That was one of the recommendations. To the training, they wanted a little bit more robust training, a little bit longer, so that makes sure that the contract managers are aware of what's going on and making sure that they have every tool that's available to them. And we have redone that training deck. It is now a 12-hour long sessions, a different individual, but there's also a work group factor to that. So once they get through that, they can also talk to their individual contracts, any kind of issues they're having, risk management problems, deliverables management, that kind of thing they can look at. And finally, 3, as Paula mentioned also, we are committed to getting a stakeholders kind of committee meeting. We've gotten some names that we think we're going to include on that committee. And we are having the charter should be ready by the end of this month. And we will be doing monthly updates to executive staff resulting from the results from that meeting or that stakeholders committee. Having said that, again, we appreciate Paula's review of our contract management, and thank you for being here. Yes.
Does that conclude the presentation? Was there one other person to speak?
Jazz is really here if there's any kind of technical things. She's boots on the ground. So Jazz Jones is my person for that.
Okay, questions?
Yes, Madam Chairman.
Yeah.
Sure.
The documentation that we talked, that you found, which was representing, I guess you looked at 24% of the, or represented 24% of the errors that you found. Now, what, was there anything substantial in the inconsistencies that you found?
So one of the things that we found was some of the documentation was consistently missing across all types of contracts. And we chose we didn't have a specific random sample. We chose across all the offices. So we had some legal contracts, some admin contracts, some program contracts, and fairly consistently, there were a few procedures where that documentation was missing, which indicated to us that the procedure either wasn't well understood or needed to be updated. So the procedures have been updated to not require documentation that really should be optional, or you don't need a list of dispute items in every single contract file. You could have one someplace that the contract managers are able to reference. But the procedures had that as required. So the procedures have been cleaned up. The training has been changed from a 2-hour training to a 12-hour training. So the hope is that this will further clarify whether the discrepancies are related to how contracts are managed or what the procedures are requiring.
This has been going on for how long?
The procedures were created mostly in 2017 in response to a previous audit we had, that there were no specific policies and procedures, there was a handbook. So as part of the continuous improvement, part of our quality plan, it's been 5 years since the procedures were written, 4 years. So it was time to look at them, revise them. That's been done. We'll do a follow-up audit in a year or so. There are assessments that are done by the contracts assessment branch each year. And so they look at a select number of procedures. So between the assessments and the audit, we should know pretty soon whether or not the revisions to the contract procedures have been effective.
Thank you. Thank you, Madam Chairman.
Any other questions?
Paula, is there a procedure to spot check these contracts from time to time?
Spot check for compliance.
Yes.
One of the things we recommend is that the supervisors of the contract managers meet with their contract managers and be doing that spot check.
The other spot check is audits like this one, which is an audit of roughly, what did you say, 8% or so of the contracts to look at where we are in compliance. And I just want to reaffirm that, you know, since the 2018 audit, we put in a lot of new policies and procedures that have just come into place. For example, we're now doing annual assessments where we are on this. We weren't doing that before. We've more than exponentially expanded the training. And we're following the recommendations here to put in place the stakeholder groups to look at and update and make sure that all contract managers understand what documentation is required or not required.
Yeah,
So
okay.
again, I think we heard a lot about this in 18 after the audit came out at the end of 18, and we've been working since that time to improve the situation.
Thank you.
Any other questions? Paula, thank you so much. And Is it Janine or Jeannie?
Jeannie.
Jeannie, thank you so much. I know that we have, I was looking forward to this report, so I really appreciate, all the work that you do. Perhaps we could schedule this to come back to F&A in a year when you do that follow-up to just say, the follow-up was done and just close that loop.
Perfect.
All right. Thanks so much. So now we'll move on to the financial reports. Hello, Brian.
Yeah, good morning, Madam Vice Chair and board members. I'm going to be briefing off our financial reports executive summary, which should be appearing now. Thank you. So this is our first page of data. We start with the accounts payable, aging, and disputes report. We report here on the first bullet that we did not have any late payment penalties in the month of August, which is a 55-month streak of no late payments, which is a very hard-fought record, but we're proud of that. We did not have any aged invoices in the August reporting period either. We also report here the number of disputes we currently have with contractors in dollar terms. That's the second row on the top table. And here you'll note that month over month, our disputes fell by about $25 million from 75 million to about 50 million. The bulk of those were for a single contractor, Dragados Flatiron. And there we've noted in the past that some of the disputes have involved invoices that included a new work or scope changes that were not yet approved through change orders. And in that case, we would not pay the invoice until the change orders executed. So those items are not paid. And in some cases, this same work had been submitted more than once over a couple months of invoices. So a lot of the dispute reduction here removes any double counting that we might have had in this area. And so again, 50 million is our current balance, which is a bit higher than we'd had year over year. We note the amount last August was about 14.5 million. So that is up over what we'd previously seen, but again, primarily attributable to a single contract. And we hope to have the issue resolved going forward. I'll move down to the second half of this page, which is our cash management report, starting with the top line, our Prop 1A bond funds. You'll note here in the chart a small increase month over month, about 200,000 of additional bond cash in the balance. There's actually a couple adjustments here. In September, we did receive notification from the state treasurer and the Department of Finance that some accumulated Prop 1A bond interest has been authorized for expenditure. So that's not really a new resource overall to our Prop 1A, but it's an additional available cash resource right now. So we essentially had about 44 million of accumulated interest that the treasurer clarified was available for our expenditures. And we also spent about 43 million out of that account, primarily for the Caltrain project in the Bay Area. We'd noted in our June expenditure report that there was some accruals from Caltrain, and the cash balances lag a bit for when those accruals are actually paid. So that June accrual for Caltrain got paid in August. And so again, what that all ends up to is about an even Prop 1A balance a month over month of about 125 million. Next, cap and trade. There you note a month over month, that's down a bit. There were no new auctions credited to the cash balance in the month of August, although we have previously reported what the August auction estimate is at $252 million. That will be credited to our cash balance in the future when it goes through the full fiscal control agency process with the Department of Finance and the state controller. The next cap and trade auction will occur in November. I believe it's one day before our next board meeting, but again, it usually takes about a week to report the auction results. So we won't have the results for our November meeting, but again, the auction will occur, I believe, the day before. Lastly, we report the cash balance for something called the Rail Property Management Fund. We don't talk about that fund a lot. That receives proceeds from lease of property that the authority owns. And the purpose of that fund is to pay some of the property related costs, such as maintaining properties, which could include cleanup activities, repair, security, things of that nature. And in the budget that the governor signed last month, SB 170 was an adjustment to the June budget, and the legislature had approved in that our state operations proposals. And one of those was to increase our expenditure authority out of the Rail Property Management Fund, which had previously been capped at $750,000 a year, has been increased now to $4 million a year. So that's good news in that we'll be able to pay a higher share of any property related cost out of that Rail Property Management Fund, which will, reduce the expenditure that would likely otherwise come out of our cap and trade for those type of expenditures. Next slide, please. This slide is our administrative budget report. I will note month over month, there's a fairly significant change here going from July to August. And again, this is related to that bill that passed the legislature in early September, SB 170, that amended the June budget to again incorporate these governor's state operations changes to the authority's budget. One of these was what I mentioned on the prior page, increasing the expenditure authority out of the property fund by a net of $3.3 million a year. So that's factored into the increase to 91.1 million. The other significant adjustments in that were what we call a form to function adjustment, meaning some conversions of contractor staff to state staff, primarily in the information technology area. This was really the year 3 of a 3-year conversion of consultants to state staff in the IT area. And with this last conversion, 17 new state staff were authorized and 25 full-time equivalents of contractor IT resources will be eliminated. So that ends up being a net savings in that area because of the lower cost of state staff resources. So those will be transitioned in over the fiscal year. But with that conversion, again, that was the third and last year of the IT conversion, and IT will no longer, after the conversion's complete, have any rail delivery partner IT support. It'll all have transitioned to state staff, which is generally what state law suggests, that where we have more permanent workload where state staff can perform it, that's more appropriately a state staff function. Also in that conversion, we had a May finance letter that the legislature approved that added additional state staff, about 56 additional positions. Many of those were to aid us in getting started on the Merced and Bakersfield extension work. They'll do various things, both starting to map right-of-way for the right-of-way we'll need for those segments, working on managing the design advancement contracts, and then some related support. There was additional bit of form to function in there in terms of eliminating, I believe, 4 consulting resources and adding 4 state staff. But when all said and done, we had an augmentation of about 13.4 million for the new state staff, and we'll save about 8 million a year from the consultant resources. So relatively small net increase overall for that conversion, and more efficient and cost effective for the state. Couple other things to point out here. Of course, adding state staff also kind of resets our vacancy rate. We do currently have total authorized positions of 429 positions with this new authority. Total positions filled, about 284 state staff. And that results now with 145 vacancies for state staff. Again, we before this augmentation, our vacancy rate on the last line of the table here was about 21.6%, which had fallen year over year from about 37% when we last received an augmentation for staffing. But again, we're now up in the low 30s, about 34%, starting over to again start refilling the positions. But one issue to note here, as over time, in the total filled position line here, near the bottom of the chart, you'll note in August of 2020, we had about 223 filled state positions, and now we have 284. So that's about a 61 position filled gain of state staff. So again, a lot of hard work to fill the new positions with good people, but that is progressing, and we're continue to make progress there. And if I could switch to the next slide. This is similar information, but presented in a little different way, just to give you the flavor of this form to function conversion. The middle of the page, the bar charts, shows you in 1819, we were about 2/3 RDP staff, rail delivery partner, to our third state staff. And that's really about flipped now. Upon full implementation here, will be about 2/3 state staff and about 1/3 rail delivery partner staff. And the chart above again shows not only the authorized positions, but where we are on the filled positions, and for RDP positions, the filled positions, if you will. It's noted here on the chart as FTEs, full-time equivalents filled, is about 291 positions in terms of the current RDP staff that are on board and working on the project. Next slide, please. This is our capital outlay budget summary. This does reflect the budget level that we brought to the board, full board last month, $2.3 billion. For the month of August, we report expenditures at 77.3 million. And the bullets in the middle of the page here do break it down by each construction package. And then additionally for the design build contracts within each construction package. And I'll note that one, about the third bullet down, the design build expenditures were 48.5 million. And that is indicated as split about 16.8 million for CP1, 20 million for CP23, and about shy of 12 million for CP4. No significant expenditures, or actually note 0 expenditures for the bookend projects in the month of August. We did have some environmental expenditures or project development, about 3.2 million. And then the balance of the other cost are things such as the right-of-way and other related work on the construction packages. Move on to the next page.
Hold on a second, Brian. Going at the rate, Madam Chairman, is okay?
Oh, yeah, of course.
The expenditure at the rate that we're going here, this puts us back a year ago, a year and a half ago, when we were barely creeping along with the CP1, 2, 3, and 4. We're back there again. What is causing that?
Well, our expenditures over the last 2 years, we had one year at about 1.5 billion, and the more recent year about 1.2 billion for the the 12-month period. So this, represents a level that, is roughly at what we've seen in the past 24 months or so. But you're correct that we're not seeing that ramp up. Certainly, it's not showing up for the month of August that we would see when we get a number of new, bigger structures underway. At that point, it would be expected to see a monthly expenditure increase.
I think some of this, Ernie, is going to be Daniel can cover in the next part of this, but I would also say that as you will see in our report of our work, we're still, particularly in the downtown Fresno area, we are still in the midst of a lot of utility relocation work that is not the heavy construction work where we're moving and expending at a higher clip. We're about 60% through that stuff. When that completes, you'll see the construction expenditures pick up. I also, as you know, we've talked about before, we have 4 large commercial settlement issues on 2-3 that we are in negotiations on, and as those advance, I expect that those construction numbers will pick up as well. So there are things that we are working through right now in real time that as we get through those, you'll see the construction flow pick up pace. But we have to get through some of those issues, and as you know, we've talked about those in closed sessions and other venues. Again, I think Daniel can cover this more in the CVSR, but that's my read of it at this point.
Which, Brian, you're saying we're stalling with some of the stall is occurring with some of the utilities, but which of the CPs is that?
So I'm talking about CP1.
Okay.
The downtown Fresno area, we have on the order of 1,500 utility relocations to make, and we're about 60% through those. It may even be higher. It might be closer to 2,000, but we're about 60% through those. But until we get all the way through those, we can't open the full-fledged construction work, and so we're powering through those now. The other one, I think, are things like we've discussed the Hanford Viaduct issue, which we are now closing in on moving forward on a path to get the superstructure going. And so I think you'll see that pick up. So I do think as we get through that work and we get through the utility relocations and those things on the ground, you will see the construction pace pick up. But again, I want to leave it to Daniel to go through that in more detail.
The only comment I'll make about that is I hope we have some lessons learned here that with these larger contracts like that we start to think about pulling out the utilities as a utility relocation as a separate contract, as opposed to tying up the larger CP contract.
Yeah.
And allowing.
Listen, I appreciate that point, because it's exactly why we have adopted and put into place in our business plan what we call the stage gate 3 process going forward, which is rather than get into construction and start construction before the pre-construction work is done, that we get these things out of the way, get the pre-construction work done, and then move into full-fledged construction contracts. And a lot of that has to do not just with the procurement method, that's one element, but it's also just the way construction started on these that we can't repeat going forward.
Right.
I think
Anything
we all
else?
inherited that. Yeah.
Thank you.
Anything else, Ernie? Okay.
Sorry.
No, you were good.
Right. I believe we can move to the next slide, Justin. So these 2 slides, there's not not really significant updates this month. This is a top chart, of course, just showing our accumulated expenditures since 2006 on the project, about $8.7 billion, and shows where those monies have gone, primarily construction and project development are the bulk of those, making up more than 90%. The bottom chart shows the state match to the federal ARA grant. And as of August, we're still waiting on FRA approval of about $350 million. I do have an update on that as we get to our last slide in the presentation, but I'll leave it there for now. If we go to the next slide. This is our contracts and expenditures report. Not too many changes here as well. You'll note we go up two from 196 to 198 in number of contracts in place currently. The value of all those contract values has gone up as well, about 50 million month over month. We report here at the bottom of the table the small business utilization rate at 23.1%. I'll note in the full board today, there is an informational item on the small business and how the utilization rates are related to various state and local requirements and goal settings and things of that nature. The bottom bullet here, bullet point, we just note that we do have a total of 634 small businesses actively working on the high-speed rail project. Most of those are subcontracts to our larger prime contracts, but overall, 208 of those are fall within the federal designation of disadvantaged business enterprise, and 71 fall in the state designation of a disadvantaged veteran business enterprise. The next slide, please. This is our use of contingency report. For the month of August, there were not significant uses of contingency. Really only 6 million were noted here, spread across various construction packages. Those are reported in the CVSR as well, individually for the design build contracts. So again, with the exception of the 6 million reported here, fairly status quo in terms of available contingency. Next slide. And so our final slide here is our what we call internally the flash report, just the quick look at September. And we've got to characterize these numbers as preliminary in most cases, as you know, in some cases they're based on preliminary invoices, and the final invoices submitted may be a bit different, but month over month overall for the capital expenditures, it's fairly similar. 72.5 million is what expenditures look like, down from the 77.3 million in August. The staffing at the bottom left is fairly unchanged in the month of August. And in the table part of the bottom right for the federal ARA, that's unchanged as well, because this is September reporting, but we have a footnote here below to note that on October 1st, the Federal Railroad Administration did approve an additional ARA match totaling 315 million. And so that takes us to over 99% complete with receiving the federal approval of our ARA match. Information we've submitted, really less than 1% pending federal approval. We have sort of over submitted, if you will. We have about 16 million left of remaining approvals and would hit the completion of our ARA match, but we submitted excess match because we do realize that from time to time, some of the prior match submittal may change. We do have some cases where we've counted right-of-way condemnation deposits as part of the match, and occasionally some of those deposits get refunded. And in that case, we do update our records with the Federal Railroad Administration and backfill the match or substitute a match. And of course, Paula's team on audits occasionally has found some issues where refunds are warranted from our contractors. And in that case, we would also notify the Federal Railroad Administration of a change in our match. And again, that's why we've submitted some excess. But again, 99% done here. We do hope to be fully complete in the coming months, but we'll continue doing some ongoing maintenance to the extent there's any refunds. That completes the financial report for the month.
Any other questions? Brian?
Thank you.
Thank you, Brian. Daniel, I think you're up.
Good morning, F&A committee members. Okay, I'm going to work through the Central Valley update report. I've highlighted the areas I'm going to speak to. So in August, the contractor's expenditures total 48.5 million. That was made up of 16.8 million for CP1, 20 million for CP23, and 11.7 million for CP4. We executed change orders to the value of 6.2 million. The biggest single change order was in CP1 that was increasing the provisional sum for the removal of hazardous materials by 4.6 million. Risk contingency is standing at just under 600 million, 569 million. Designs are substantially complete. We do have a few design packages that are going to slip into next year, but we're very confident we will complete all the design by the first quarter of 2022. There are 2 packages outstanding on CP1. They are primarily for works that was added late. That is the 2.5 miles of guideway that was originally planned to be in the SR99 contract, and there's also some sweeper packages. These are items that were added at a late stage. We have 3 design packages outstanding on CP23. These are primarily just waiting for access to property so we can do some borings to get the geotech analysis so we can finalize the designs, but the designs are substantially advanced. Okay, in third-party designs, we've got another 3 third-party designs approved this month, so we are progressing. In terms of construction labor, we had 1,051 workers on site in August. This is a reduction from July where we had 1,155. The main reason for the reduction is that we completed several areas of dirt placement and embankments. And as we know, movement of dirt is very labor intensive. We are also diligently resequencing with the contractors to open up some additional embankment works in the coming months. Next slide, please. Next slide, Justin.
Daniel, before you move away from this one, can I ask a question, please?
Of course.
Are any of the, if you go back to this slide, the delays that we're having, are they a result of a right-of-way?
Yes. Yes, in some cases, absolutely, yes.
Where are we with right-of-way, since it's not listed here?
I'm coming to right away shortly, Ernie.
Okay, thank you.
Okay, in terms of construction packages, structures, with 65 structures in construction are complete out of 93. We're a few behind, which I will discuss further in the report. In terms of guideway, we've got 84 miles of guideway either completed or in construction. We are behind by 1 mile on CP23, and that is a land issue. And on CP4, we're behind by 1 mile, and that is really, we've actually cleared and grubbed that mile, and now we're putting up the environmental fencing. But that is the semi-tropic land where we have to have full design approvals before we can take possession of the land. But it is in process. Okay, I know Brian touched earlier on the utility relocation status. So we've 2,000 utilities to relocate. So to date, we've relocated 657. We got another 543 that are in progress. And we've got another 93 utilities that are ready to start construction. Of the ones that haven't started, which is 769, they're at various stages. We may be waiting for environmental clearance. We may be waiting for third-party agreements, design approval. We could be waiting for a construction work plan, pre-construction walkthroughs, could be acquisition of right-of-way and/or land conveyances. Okay, we come to right-of-way. So August was a good month for right of way. We delivered 24 parcels, which again is quite good progress. There were 6 parcels added. Fortunately, these were all parcels of land that were already owned by the authority. There are another 10 parcels of land identified by contractors. These are being evaluated by Dennis Kim and the right-of-way department as we speak. And our preference is obviously not to add any right-of-way parcels, but if the designs dictate we have no other option, then we may have to add 1 or 2 more parcels. Next slide, please. Okay, in terms of key third-party agreements, this is progressing very well. There's only 3 significant agreements outstanding, which I will discuss further later on. In terms of environmental clearance, this is all progressing very well, and we plan to bring Burbank to Los Angeles to the board in January for approval. That would be another 11 miles for approval. Next slide, please. Okay, this is a graph of expenditures. You can see we had a 49 million contractors expenditures versus a target of 67 in August. The projected targets going forward are subject to revision. They were all based on the original schedules, and we will be revising those in the coming months. Next slide, please. Okay, this shows the drawdown of contingency. So we're anticipating the contingency will be at 496 million by the end of September. Next slide, please. Okay, this is a graph showing the progression of third-party designs. We still have 137 third-party design approvals. So we are progressing these actively, and we are engaging actively with all third parties. Next slide. Okay, this shows the graph of construction labor. As you can see, for most of this year, we've been on a continuous increase. Obviously, August is a downturn. For the rest of the year, we're hoping to maintain this. It may come down a little bit further, but we need to just keep opening up more areas, in particular embankments. Okay, next slide, please. Okay, so I already spoke about the guideway, so we're going to speak about structures now. So we're 6 structures behind at the moment. 3 of those reported in the last meeting. 3 of those are for CP1. We got Central Avenue that is delayed because of an agreement with PG&E, which we're working on at the moment. Jensen Trench is going through the process of getting approvals for a railroad crossing. So we're working on that diligently. And we've got Avenue 17, where we are renewing a design for PG&E works. Then we have 2 other areas on CP23, Deer Creek, where we are still awaiting for the land with the Alpaw Irrigation District. Discussions are closing in on a final resolution there. Granville Avenue as well, we're still waiting for some right-of-way acquisition. And then there is only 1 structure left on CP4, and that is the pedestrian underpass at the Amtrak station. So we're just awaiting a permit from the city of Wasco, which we expect to get either today or tomorrow, and we can immediately start construction. That will mean that for CP4, all 11 structures will be in construction. Okay, next slide, please. Okay, so this shows the progress of right away. So as of the end of August, we had 352 parcels left to acquire. As of last evening, Dennis Kim confirmed that we had 300 parcels left to acquire. So we are whittling this figure down. With 300, that is still challenging, but with Dennis Kim's leadership, I have no doubt we will get this completed.
Madam Chair, Nancy,
Yes,
can I just make a comment about the status of right-of-way and where we are right now?
sure.
Because these are just raw numbers, but I do want to note that, the course of the last, we've changed leadership and the perspective in the right-of-way office, and over the course of the last 7 months, that office has delivered 180 parcels. That is a pace that we have not seen here in really ever, in terms of consistently 25 to 30 parcels each month. That's the good news and the upside on right of way. The other part, though, that's important to note is that I asked the new leadership in right of way to review exactly what our forecast on the right of way is, and lay that over our assumptions for schedule on construction. And so they've done a review of that, because some things about right of way, as you know, it's a intensive process. You're talking about people's private property. It's very process oriented. And so there was a direction to the right of way team and to review that schedule on right of way as we see it going forward. Make sure we have a very realistic schedule we put in place, and a timeline that will really serve properly the construction expectations. And so that is work that we are going through right now. And I've raised this because while right of way is doing good work, the other element is, what does the future look like on the delivery of these last 300 parcels that we're left to get? I do believe, based on where we are today, that by the middle of 22, we'll be more than 90% complete with right of way for all three packages. And by the end of 22, we'll be somewhere between 95 and 100% done with the right of way issues. That's the pace we're on now. But there are also some construction impacts of that we are evaluating now. And I am coming back to the board. You may recall I did a full board presentation on construction last May, and we are bringing that back to the board in November. I will go through more of some of the analysis that we have underway on the right-of-way issues now, the impacts on construction. So there is good news about where right-of-way is, and there's also challenges that we need to be clear on going forward to make sure that right-of-way schedule is doable and completable, and we understand what the impacts or effects will be on construction. I'll come back in November to the full board with a presentation on that. So I just wanted to make that point.
Any questions for Brian? Brian, I just want to ask you, does our right-of-way parcels include parcels needed for utility relocation, or is that in the other slide?
No, we do. I mean, we have to obtain right-of-way for those purposes as well. And not just, utility, railroads, others.
Right. Yeah. And that's all in this slide, right?
Yes, I believe this
all right.
count includes.
Correct. We have another slide, Nancy, which shows the railroad parcels as well. Parcels we're getting from Union Pacific Railroad and BNSF.
Okay.
Yeah, I think in total, Nancy, you'll see on the future slide, but I think in total we have something like a total of 166 railroad parcels needed, and I think we're at about 112.
Okay.
So.
All right. Great. Thank you.
Okay. Next slide, please. Okay, so this shows the railroad parcels. So railroad parcels are delivered as and when we need them from the railroad. So we're on time here, so no issues. Okay, next slide. Land conveyance, we're ahead of the curve on land conveyances. Even it says here we got 598 land conveyances completed. We probably have another 250 to 300 land conveyances packages at 95% complete as well, just waiting for the land acquisition. So we're well ahead of the curve with land conveyancing. Okay, next slide, please. Okay, this is the final slide. So there are basically three critical third-party agreements left. These are the City of Wasco agreements. Garth Fernandez, our regional director, is spending a significant amount of his time sitting down and working with the City of Wasco, and we are making significant progress here, and we anticipate all these agreements to be finalized by the end of this year. In the interim, we are cooperating with the City of Wasco and making good progress. Thank you.
Sorry about that. Any questions for Daniel?
No.
No.
So then we move on to the Central Valley report.
So that was it, Nance.
Oh, that was it. Okay, well then I think we're concluded. If we have no more questions. All right, so our committee meeting is now adjourned. See everyone at 11.
Thank you.
Thank you. Good job.